Hello, Market Chameleons and new friends of the show, brought to us by Donald Williamson. We want to welcome Donald and Dimitri. Donald's an active Market Chameleon user. He's about to come over to our webinar today. We've got 13 people in the Zoom right now. You have Dimitri to my left on my computer. I don't know if he's to the right of yours. Donald's below. D, while we're waiting for Donald, why don't we just get through the disclaimer? What do you think?
Yep. Hi, guys. Before we get started, keep in mind, we are not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional help, call your broker. That's what they're there for, to help answer your questions and provide you with guidance. Here's the disclaimer, and I guess we could get started. I think, Donald, you're on mute, just so you know.
But while Donald's taking his mute off, why doesn't everyone let us know that they can hear us? Put into the chat maybe where you're from. My name is Will McBride. I'm one of the co-founders of Market Chameleon with Dimitri and his brother. And I am from Pennsylvania, actually Bucks County, Pennsylvania, real close to where Washington crossed the Delaware on Christmas Eve. D, where are you hail from? I forget.
Philadelphia,
the city of brotherly love.
Yep.
And Donald, what about you? Where are you from, my friend?
You know, I grew up in the dirty South, man. Are you a Penn State fan?
I went to Penn State.
Oh, did you? So
yeah, that's where I went to college. Yep.
Well, that makes me a fan of Penn State.
I'm an Auburn Tigers fan. So were you watching the game?
I did watch the game, even though I'm not a Penn Stater. Penn State and Auburn don't play that often.
No, they don't. I think they're scared of us, but we'll keep that for another conversation.
Yep.
But did you grow up? Auburn's in Alabama, right?
Correct. I grew up my first 10 years of life in Louisiana, and then till about 18 in Alabama, and then I've lived all over the place after that. Just lived in Georgia, mainly in the South with my businesses, was the general area.
Great.
Now
and
I'm
now
in Los Angeles because my wife's family's here. So.
Oh, in LA. Nice.
Yep.
Oh, now you have an extensive interest in business background. You want to give the Chameleon community and everyone else on the webinar a little background of what you've done?
Absolutely. It's
what brought you to trading.
It's my first slide. So here I'll bring up the presentation here. So for those of you that don't know me, my name is Donald Williams. I would like to kind of sum up what I've done throughout my life. I was an entrepreneur, and I started my first business in kindergarten. I was successful bringing home $3 to $5 pretty frequently, which back then, it's a lot of money as a kindergarten. You can get some good candy with that, right? But I'm sure a lot of you guys have done the same thing. How many of you guys started a business? Put your business in chat in schools. That's pretty common, right? Well, this is how I learned that government was not the entrepreneur's friend. And my teacher sent home this note. She was like, "Hey, Donnie's selling his Tootsie Roll Pops on the bus this morning. Here's his earnings." So the government's already confiscating my earnings in kindergarten. So I knew then, hey, you know what?
That's funny.
The worst part about this is if you read the bottom of the note, look, however, he did finish all his work on schedule.
Hey, Donald, I just realized you're showing your screen. You got to go back. Everyone wants to see it. You didn't share it. Sorry about that. I didn't pick up on that.
Thank you. Here it is, right here.
So let me recap this for everyone who just joined. You were selling candy. You were a young entrepreneur, 5 years old.
Yep.
And they confiscated your candy?
They confiscated my earnings and my candy, all of it.
Oh.
and they gave them to my mom, right? So, I learned real quickly that the government wasn't on my side as an entrepreneur, but that didn't deter me from going forward. I decided that I was going to do the franchise model. And so what I did is I actually built businesses through acquisition, expansion, and organic growth. My business grew to millions in sales. I had locations, like I said, in multiple states throughout the South. I had over 200 employees. I'm sure you guys have all heard of Subway. I don't know how many have heard of Sport Clips. It's where guys win. And then a lesser known franchise that's more out west is Costa Vida. But this is how I was making my money. Throughout my life, I had known about stocks because when I was 8 years old, my dad bought me my first stock. And back then it was a little piece of paper. So I had this piece of paper on the wall. I didn't even know what it was. But what I did know is when my dad came to me and told me it was time to turn in that piece of paper, I got money, and I was like, oh, I like this. Whatever this is, I like it because I made me some money, right? And that stuck with me. And in the 90s, day trading isn't like what it was, what it is now. It was very uncommon to have people that were quote unquote day traders. I actually signed up for a service called Day Tech, and they had commissions of $14.99. That's how they got me in. They said, hey, we'll only charge you $15 in and out. So how many of us in here would pay $30 to get in and out of a trade? We get free commissions now, right?
I don't think anyone would. You're right.
Yeah, but back then it was a big deal. So that's kind of where I started my quote unquote day trading journey. But eventually my wife wanted to come back to California, which is where we are now. I sold all my businesses and I took some of that money and I decided, hey, I'm going to learn how to trade. I blew up my first account like a lot of us do. And I decided then, hey, you know what? I can't sign up for all these guru services and expect to follow them and make money. So I needed to learn how to make money on my own, create my own edge. And that's what I've done. And I've actually started a website. You guys we'll talk more about it at the end, but it's called the Trading University to actually teach you how to trade instead of saying, hey, follow me and let me dump my shares to you after everybody's chased it up. Now, I'm kind of uncomfortable with talking about how much money you made and how much you do here and there, but I understand that to validate yourself as a trader, this is how you do it. And needless to say that I make plenty of money. I live in California, right? And the government takes half my money now already, right? It's California. And this is how I make my living, off of trading. Now, what I want to share with you guys is just, I actually only account this as one edge. It's my earnings play edge, okay? And within this earnings play edge, there's actually a few different things that we do. So I'm going to go over why I love to play earnings, 6 different ways I do play earnings, historical data, which is where Market Chameleon comes in, making this data useful, combining it with technical analysis, which I abbreviate here as TA, preparing for the trade, and then executing the trade with correct timing. All right. Any questions so far, Will?
No, we don't. But let's just go over the questions. We're going to try to hold, unless the question is specific to something, Donald. Is it Donald? Is it Donald or Don? What do you want the Chameleon community to refer to you as?
You can call me Donald.
All right. So we'll go with Donald. So if Donald's doing something on the presentation and you have a question on that particular topic, let me know and we'll try to get to it when he's there. If not, hold the questions to the end and we'll have 15 minutes, something like that, at the end of the presentation to ask, because I've got a couple questions already in the back of my head. So I'll hold those to the end. So why don't you get started, Donald?
Yes, sir. All right. I'm going to go through this. I hope it's not too fast. My brain works like this. I'm a hyper scalper. I trade a lot. And so I know that that's how my brain works. If I'm going too fast, you guys just let me know and I'll slow it down a little bit. So why I play earnings? Well, number one is you get range. If you're sitting in front of your computer all day, and you're looking at the ATR of a stock and it's $12, well, guess what? After earnings, you can get that ATR in 5 minutes. You also get quick hitters. You're in and you're out. The liquidity, there's just so much volume that comes in. And then earnings often creates gaps, which I love playing gaps. The other thing is the data. You actually have some type of historical data that you can go back and say, hey, this is what it's done historically. So those are why I play earnings. And these are the 6 ways that I play earnings. So you've got before earnings, and this picture right here that you see, it comes from Market Chameleon. If you don't know where this is, just let us know. But this comes from their earnings tab on Market Chameleon. Now you can see it's got before earnings. So that's number 1 play. Then it's got day of earnings. That's number 2. Then it's got after earnings, which is number 3. And then I've actually got through earnings, which is number 4. And then number 5 is the 1.5 times play. I'll go into that a little bit further. And then I got the ranges. And this is from an Excel sheet that I create that I put all the information into that I'll show you guys where I get these ranges of where things will go or have the possibility of going to. All right. Now, Market Chameleon is like, I don't know, it's kind of like a godsend to me. It's just a plethora of data. And I don't know how many of you guys are kind of nerds like me. I just love data, right? I think Dimitri fits with me on this because we we love this stuff. It's just like, give me as much data as you can. So what you see here is before, day of, after earnings. And then you see the 2 weeks, 1 week, 3 days, 2 days, 1 day. Then you got an earnings move, opening gap, drift open to close, 1 day, 2 day on after, right? That's what I actually put into my Excel sheet. The only thing that I actually put in my Excel sheet as far as down here is concerned, it's actually the positive occurrence. Because if I know the positive occurrence, well, I know the negative occurrence, right? So I don't really need the negative occurrence. And this is what my Excel sheet looks like. So I can go through here and I've got all these earnings coming up and it's like, man, what's a good stock to play for a run up into earnings? Well, if you understand how this data works, what Market Chameleon is telling you is, hey, if we look at JPM here, 2 weeks before you're 75%, 1 week before you're 83%, 3 days before you're 75%, 2 days before you're 75%. So that's pretty good run into earnings, right? This is the exact same data from Market Chameleon that I'm showing you right here on this symbol line for my Excel sheet. All I'm doing is transferring it over, right? Now, any questions on that? Will, is that clear? Does that make sense for the Excel sheet?
Yeah, that looks good. I think there was a question, but we'll ask some of these at the end. You know, people are asking like if you played certain earnings recently. I think like Nike came in, but we could talk about that at the end.
Absolutely.
As these questions come in.
And those questions fit perfectly into combining everything together, right?
Yep. Okay.
So,
awesome.
Now, what I do is once I get all the information and the data in, which takes a long time because I'm sitting there and I pay my daughter to just copy and paste it into the Excel sheet. So once all the data is in, then I start looking for patterns, right? So home, it looks like it runs into earnings. You've got CLDR, Cloudera, they run into earnings, right? Crowd gives you a little bit of run into earnings. And so I'm just looking for patterns per the data. You see how GME runs into it as well? So 1 week before, 3 days before, it's 92%, 92%, and then 75%. So all you're doing is you're just going through here, hey, where are some patterns that I can find? Now, if you look at work, I love work because work actually gives you multiple shots on goal. So if you wanted to try to take a short position, vertical call spread, or something of bear call spread, something of that nature, well, if it doesn't work out in the first 2 days, you can actually play it through because your earnings move gives you a 25% gap down and earnings move. So you got multiple shots on goal. So just in this one slide, I've got before, I've got after, and I also have through on here that you can play. Now, the day of earnings, you can learn more about this on Market Chameleon. There's actually, if you just scroll over it, it'll tell you a little bit more about it. But the earnings move is the total move for the day, meaning the move from the earnings, day before earnings, right, to the close on the day of earnings. That's the entire earnings move. The opening gap is where you go open after the ER comes out, right? So like Nike, for example, wherever it opens tomorrow, that's going to be your opening gap. Now, the drift, which is one of my favorite plays, is where do you go during the day, right? Where do you go from the gap till the close of the day? So if you put together the opening gap, right, and the drift to the close, well, you're going to get the earnings, okay? Does that make sense? That's all Market Chameleon data. That's what Dimitri has done for us to gather all this data. So just make sure that you understand, hey, this gaps up 92% of the time, but what does this company do after it gaps up? You guys tell me. Does it keep going? So after I sell my position into this opening gap, or after the stock market opens, should I continue to hold this position or should I look to sell it? Well, you get that information from the drift, right? It drifts negative 25%. So I should look to flip my position, sell out of my long position and flip it to a short position, okay? Now, my Excel sheet this is my home page of my Excel sheet, and this is where I get ranges that I want to play. I put in information. The information that I put in is price, right? All the other information comes from Market Chameleon. Now, the absolute average move, the absolute average gap, the percentage high to low, All of that is Market Chameleon driven, okay? This is where I get this information from. That same sheet of paper, it's all right here, this absolute average return. So I put all that in there, and then once I put in price over here, it's going to tell me where these levels are. And I'm going to show you guys this with Nike and with Costco. I'll show you exactly how it looked today with those two plays, okay? So again, this gives you the range where if it's following the normal patterns, it will go, right? So the implied move is IM, 3.6%, gives you the range. Then you got your absolute average move, that gives you the range. And then you got your actual open, percentage high to low, that will give you the range as well, okay? So the only thing that I have to put in is price and actual open, and then it automatically does it for me per Market Chameleon data. Now, if I'm wanting to short a particular stock, let's say this one that's at 25%, let's just pretend this is home. Well, where do I need to short this, right? We need to short it when it's at the high of day, okay? So how do I find the average high of day? Well, at that point, I simply look to the actual open, and then I can see, okay, well, where is the price from open to high? Well, according to the data here, it says it's 8%, right? So that's 7.9%. That's saying, hey, that's how high we on average will climb. Now, that gives me a range to say, you know what? I need to sell and or short my position at 1942, right? That's the top side of the range. And then the low side is 1654, okay? So combining this with technical analysis, like let's just pretend you saw huge volume profiles around, let's say 1950, it all adds up and makes sense. Boom, that's a play I want to take, all right? Now, this is just an example. Actually, when I reached out to Dimitri, I gave him an example, and I just said, hey, this Okta, it looks like it's wanting to bounce at this particular level, and I pepper sprayed my orders in, and it bounced. So this is a live one that actually I was doing with Dimitri when I reached out to him. So if we look at the data here on Okta and we look at the range, you guys see the range. See how it says 245, 246. Absolute average gap is about 250. So what I do is I'm like, all right, let me look at chart wise where a bounce level would be on a technical analysis basis. And my number one edge, guys, is called volume profile. That is, I use that throughout everything that I do because it gives me an idea of where other traders are, and that's all I need to know. So using volume profile technical analysis, all right, does it match up? Well, if it does, I'm going to be taking a shot, okay? And you can see those levels were here. So what I do is I pepper my orders. When I say pepper, I think of it like a shotgun. It kind of spreads out, right? You know, I'm from the South, the good old South where we shoot guns. So I hope that doesn't offend anybody. But a shotgun goes wide, and I want to cast kind of a wide net. So it's like, you know what? There was a VP level at about 248 down to 245. So let me put in a third order at 248, a third order at 246, and then another third order at 245. Now I play smaller because I get range, right? I'm getting huge range. I don't have to play with my normal size to get the amount of money that I normally make. So make sure when you're trying this that you, or if you try this, that you size down and get practice with it and play with smaller amounts, and you'll see the amount of range that you can get. You don't need a lot of shares to make money doing this. Now, if you have a broker that requires you to identify after hours trades, you need to make sure that that's on. Like I use E-Trade, and we have to actually set the order to an after hours order, okay? So you can see exactly what happened. This one just happened. They all don't work out like this. But this one just happened to work out perfectly. It kissed the very bottom line at 245, and it immediately shot back up. And then the rest of the day, from memory, it kept going. I sold about halfway through the day. And I remember I was a little upset because it just kept going. So just a quick example. Another one is Docu here. This is just showing you how I use technical analysis to line them up. So you see here, these are the VP lines that I have drawn on Docu, okay? And this says, hey, you know what? If Docu pops up to these levels, this is where I'm willing to take a short. And you can see these levels that the market chameleon's given us, this range. It's like, all right, well, what matches up? Well, looky here. This one seems to match up pretty nicely. You got a good VP level here. You got the data that's saying it shouldn't go over this. Okay. Now, does it always work? No, and we'll get into that. That goes into the 1.5 times play. But that's where you want to short. Now, the other thing that I want to put in here that is very key, and it goes to earnings this week, you have to take in market conditions. What happened here on Docu, I don't know if anybody remembers, but Zoom had earnings and they just like went crazy, right? It just went through the roof. This was COVID time and it just went crazy. So the day after that, everything just went up. It was just, everything went crazy. And so knowing that, and then the market was just selling off, right? The yin to the yang, knowing that that's where we were, I decided, hey, you know what? I'm much more comfortable to take this to the downside because we were too high, right? We've gone up too far, too fast. So again, that's just taking in market conditions. Now, if you look, where did I put my orders on this one? The VP levels, right? This was the downside. So I have the top and the bottom. So these are the VP levels on Docu. On the bottom side, and I showed you the ones on the top side, right? So if this makes sense, so I've got the top side range and I've got the bottom side range that I'm looking at. Anything line up with the data and the technical analysis? Well, yeah, we saw the top side. Here's a few to the bottom side. So this is what I'm willing to play on the bottom side. I've got what I'm willing to play on the top side. And that's what gives you the range, okay? Any questions on this before I jump on to the 1.5 times play? Because what happens, guys, is this doesn't always work. Think of it like what you're trying to do is you're trying to be on the side of the market makers, because what are the market makers doing? They're saying, hey, we think it's going to stay within this range. And most of the time they're right? But there are anomalies that happen where it goes outside the range, okay? So the range play is more of, hey, I'm on the market maker side. I want to play with them. Any questions, Will?
We did have one question, and it came from a pretty active chameleon, Jake, and he was asking, it would be interesting to find out which weapons of choice you are using in these earnings plays. Like when you see that, do you go out and do a calendar? Do you just buy the straight calls? Do you sell the put? Like what exactly are you doing? Is what he's asking.
That's a great question, and I'll go through a few of my plays at the end of it. The majority of my plays on through earnings is always a sell to open type position, right? Because I don't want to hold a long call or a long put through because of the IV crush. So my favorite position is actually a short straddle. Now, if you don't know what you're doing on options, and you don't know how to hedge, right? Those are naked positions. You need to turn it into an iron condor or an iron butterfly type position. For me, it's the short straddle. However, if there's something just favoring to one side, example is GME, I'll put a vertical call spread or a bear call spread on that position. And occasionally when things get a little wacky, you can actually get pretty good, I hate to say this because people will blow up their accounts, but you can actually do pretty well by selling naked calls, right? So like, for example, Tesla, I remember I sold Tesla at like 3,000 or something like that. And I got like $3 for it. And Tesla, I think, was at 1,200 at the time, but it was just going so crazy that I was able to sell just some naked calls at 3,000. Again, if you don't know how to hedge, you never want to be naked on any type of sold to open position. But those are mainly what I use for the through plays. Now these after the range plays, I'm doing stock only. It's strictly stock because options aren't being traded after hours, right? So to catch that dip down and that whip back up, it's stock only. So let's say you do, let's just say 300 shares. You know, I put in an order, 3 different orders at 3 different levels of 100 shares each. So does that answer the question?
Yeah, that was perfect. Thank you.
All right. Now, when the stock goes against you, right? When the stock's like, man, it's going way outside of its range. Well, what that means, guys, is the market makers that have sold these positions, they're getting squeezed, right? And I call it the 1.5 time play because you're going 1.5 times the implied move. Now, this play in itself is the easiest to understand and pays out by far the biggest returns. Now, what you're doing is all you do is you go to release dates here, as you can see on Market Chameleon, and it's going to give you your implied move. Okay. And that's simply your implied straddle here. So on Adobe, the implied move is 5.2%, right? Now, what I do, you can choose how you want to play it, but what I do is I get short dated out of the money calls. Okay. So I'm looking to get quick returns. It's called the 1,000%, right? That's what we're going for, 1,000% play. That's the ultimate goal. I do sell. I don't just buy one shot and hold it to 1,000 and sell. You know, I do sell as it goes up, and then my final piece is usually around 1,000+%. Now we have the data in Market Chameleon. This is W day. You can see the implied move is 4.8%. Now, what happened on W day? Okay. I don't know if you guys remember, but it actually opened up much higher. It opened at 265. So can you see the range up right here? Sorry, right here. This is showing you the range up, 258.60, and then down is 234. Well, if it opened at 265, we're obviously outside of that range. So I would have taken a loss on my range play. But you know what? I'm rubbing my hands together because that's what I do when I make money. I rub my hands together like this and I'm just, woo, here we go, baby, because it's setting up a squeeze play. I'm okay with this loss. Great, let's squeeze it because I prefer to have that one because I'm going to make more money on that one than I am the other one. So here we are. We're squeezing people. Anybody that plays options understands that market makers, what do market makers have to do to cover their sold to open positions? If a market maker has sold to open, let's just say a call at 260, because he thought, you know what, I think we're going to stay in this range. You know what does he have to do to hedge his position? Does anybody know that? Can anybody answer that? Any answers out there?
Someone says
People are saying buying stock.
That's it. You got it, right? That's what they got to do. They have to buy the stock, right? And so this is what we call a squeeze. That's all it is. You're literally squeezing the market makers, right? Who doesn't love to do that as a retail trader? It's like, all right, you guys all sold these things out. You thought you were going to make money. Boom, let's squeeze it, right? These are anomalies. They don't happen very often, but when they do, I love it and I want to play them. Okay. My risk is usually between 50 to 100%. Like I'm willing to lose all of it, but my reward is 100% to 1,000%. Now, when I'm buying further out of the money options, short dated, hopefully weekly. If they don't have weekly, you got to go with monthly. Well, I don't want to spend more than about $1.50. Okay. I'm shooting between, my target is 50 cents to $1.50 on entries. Now, I'm not smart enough to tell you all the formulas that it takes to determine which option is going to be priced between 50 and $1.50. Like I don't know the formulas. I've been doing it long enough and I've done it long enough where I can usually tell, hey, this one's going to be about between 50 cents and $1.50. So like on W day, it actually ran up right before the market opened. So I actually had 275 put in because I thought that was going to be it. But right when it pushed right at open at 265, so I knew 275 wasn't going to be priced at that level anymore. So I actually had to move it up. And so I'll actually have all these pulled up. I'll have 275, 285, or as it shoots up, I'll have 285, 295, and then you're getting close to that 300. I'll have them all pulled up, and I'll have peppered orders in like around 50, 75, $1, $1.20 to try to get filled. And if you don't get filled, right, if it opens up above, you can never market. Well, I can't say you can never. You don't want to market order in because right at that beginning, the spreads are so wide. You may have something that's, a spread between $1.75 and $4. So if you market order in, you're going to be down, $3 already on your option. So just be aware of that. If you do not get automatically filled, try to get filled off the bid, right? You don't want to market order in. Okay. Now, what the Excel sheet does is over here, this red line, X times predicted move, automatically it shows me 1.54, right? I know this is a 1.5 times move. So boom, I'm going to be all about it. Okay. So any questions on this or how to play these?
Everyone seems to be picking up your style.
Okay, perfect, perfect. So I'll give you an example, Docu. This is one that you can see here. I'm sorry, that's the next one I'm gonna go. The earnings move was 19.8%, right? It was just a squeeze from the word go, okay? It was my biggest winner of the year on percentage, not cash value, but percentage wise. So I actually got 5,000% out of my last piece on Docu, because a couple things here. We're going down the day before. Anybody that's shorted into this is trapped. We've gapped up. It did not pull at all, right? There's hardly a little wick down, and then it just ran the rest of the day. And so I was filled on these lotto style plays. I think I took a 230 was from memory. That was what I took. And I was actually in the money by the end of the day. And, you know, it was just an incredible win. But here's another one that I took on Twillo. And I just wanted to show you the math of it. So you can see the cost basis here was 71 cents. I had 5 contracts left. Again, I didn't buy 5 at the beginning and sell 5 at the end. You know, it's like buy 20 to 50, and then you just piece out. Total investment on this piece was $355. Total value now is $4,087.50. Total P&L, $3,732, right? On a 355 investment. Well, what percentage is that? Well, it's 1,051.41% winner. So that's how powerful these can be. All right. These are great, great plays. Now, the other thing that I do is what I talked about was short straddles and things of that nature, right? And so this is the risk profile that you'll get. You know, it's basically, for those of you that understand options, you don't want it to go above this, you don't want it to go below this, and this is where you can make your money right in between, okay? So these are some of the plays that I like to do. Like I talked about earlier, if you don't like going naked and you don't know how to hedge, you got to go with an iron condor or an iron butterfly, okay? So here, the implied move was 15%. I thought, you know what? I think it's going to stay in there, because guess what? What's the absolute average move? Well, Market Chameleon tells you what the normal average move is. And you can see it's the second circle over here. It's just 8.5%. So I'm getting twice the amount of move. Does that make sense? So whenever a stock says that I think I've got it programmed at about 1.7%. So almost twice the move, I'll get an alert per my Excel sheet that'll say, hey, this is one that you want to take this straddle on, because you're getting a lot of implied volatility to sell. So the other thing about this one was only once, this is from Market Chameleon, right? From their earnings tab, only once had it gone out of the 15% range, one time. And that was 21.7. So I thought the odds were pretty high in my favor. That's why I was willing to take the shot. Okay. So any questions on that?
No, I think we're good, Donald.
All right. So a couple key points here I want to mention is remember to put in the info promptly, right? Have your orders in and ready to go. If you're trying to play those range plays, you need to prepare 2 weeks out. So Market Chameleon, you can download the data 30. I use plus 30 days. You can download all the earnings that are announced plus 30 days. So I have those in my Excel sheet. You need to be prepared 2 weeks out. You need to use the skills of technical analysis, data, and environment. Now, this week on Monday, I wasn't willing to play earnings at all because I didn't know what the market was going to be doing. I didn't know if we were going to keep puking, right? I didn't know. Today, I was willing to play earnings. But Monday I was not, because of the environment. Now, above all, in anything and everything you do as a trader, I don't care how new you are or how much of a vet you are, you have to control risk. That's everything. If you want to stay in the game, control your risks. So I've got other examples I can show, but I think we should get to some questions. And one of the things I'd like to put in here is I'm not your typical I hate guru. I hate to say that, but you're not your typical teacher. What I've done, guys, is it frustrated me so much to watch how the gurus would use their clients to make them money. You know, they'd always be selling services or selling indicators or doing something. So I actually started a website and a university. It's called the Trading University. And this is a little bit about it. While we go through Q&A, I'll leave it up here and you can read about it. And if you want to learn more about this, you want to learn more about my trading style, more about how I play earnings, this is where you can get it. And now there's a QR code. I'm not this technical savvy, but if you want to take a picture of it, you know, it'll automatically load that page for you. For me, I'm like, where's the link, right? I'm an old school guy. I don't get that stuff. So let's jump to the questions, Will.
And Donald, I was just going to ask that in your community is just a group of traders, and all of you are basically helping each other by pointing things out around earnings and earning plays. Because I think you mentioned to me that a lot of the people in your university help you actually compile some of the information and data. Is that correct?
That's right. So the way that it actually started out, Dimitri, there was one guy that reached out to me. His name was Anon, and he was like, "Hey man, I've been jumping from person to person. Can you help me?" And I actually took him under my wing, and I don't want to tell you how much money he lost, but within a year, he was this may not be the greatest sales pitch, but within that year, he actually didn't lose money. I think he made like $1,000 or something, right? But he was losing it beforehand. So who can go out and make a sales pitch? Hey, if you don't want to lose money, sign up for my service, right? Like, who does that? Nobody does. But if you're a real trader, you know what it means. After that, he's become a profitable trader. Once that happened, I was like, you know what? I do want to give back to the people. And I had a group of community traders that I was trading with at the time. And I said, hey, let's start our own service where we can invite people in. I've never advertised this anywhere, Dimitri. This is the first time I've ever advertised this. And this is the first time I've ever shared this edge outside of my community. And so that's what it is for. It is literally to create a community of traders where we can pull together our resources and help each other make money. Now, you do have people that are on very different levels, Dimitri, like brand new, right, to more seasoned. So I don't want to say, hey, it's a group of really seasoned traders and we're all making millions of dollars. That's not true. It's a group of traders of all different levels that are trying to learn how to become their own trader and not follow somebody else's alert.
All right. I always tell people, that if I think it's successful for a trader, if you could get to break even and do a lot of trades, if you're at that level, that's considered success. I think too many people try to get in there thinking they're going to go right away and have wins. Even for professionals, anytime I start doing a new strategy, trying something new, it takes me about 6 months to get to break even, of tweaking and going back and redoing it. So some of people's, I think some of the people's just expectations getting into trading don't realize that just because you're participating doesn't entitle you to, making gain. It's hard. It takes work. It takes time, even for professionals, and, you could kind of go I was reading, Citadel, one of the biggest players in the space. So Citadel is probably like maybe the biggest market maker right now, bigger than Goldman Sachs. And they had traders and programmers who worked for them try to create their own firm and leave Citadel. So there was this big lawsuit because they had a non-compete. So you could go and actually read the lawsuit, and what they were doing. And even Citadel, the very best, I would say they're probably the best in there, are telling them, look, we'd work at Citadel, we'd work on a strategy. It took about 6 months. Sometimes we had to put some away, but it took about 6 months to get to break even. That's probably your average. And you're talking about people with a lot more resources. So when people come in there and say, well, I'm going to do 3 trades and 5 trades and see if it doesn't work out, I'm done. You're already, at that point, you're already lost, right? It's if you think in 5 trades, you're either taking off or that you've already lost. So some of the things that you're saying are resonating because, like you said, it took you your first year, you just had losses,
So I blew up multiple accounts, blew
up multiple accounts, and that's very, very common. And
Yep.
People who stick with it, it's because they just love it and want to learn, and they don't look at it from that way. They're like, okay, how do I improve? And I'm not saying you should go blow out accounts, because I think the problem is that one of the reasons it's happening is people trade too big of a size.
Absolutely.
One of the things that you just showed us, and I hope people paid attention, is you showed us a trade. The size was the risk was $355, right? That was the risk on that trade, $355. And I can't tell you how many times people call, they complain, well, my account was $10,000. I bought a call for $6,000. Stock went down, and now I'm like, but you just took 60% of your capital and bought a call. What did you think? Like, that's crazy. I kind of think of it as like, if you drive a car and you get super drunk and then drive it and crash it, and you shouldn't be surprised because you did something foolish,
Why my car run into a tree? I mean, what's going on, right?
Yeah, exactly. Well, why did the car hit the tree? Well, that was you doing it, because you're doing something foolish. So, just some of the things that, stuck out that I just wanted to share with people, that, and I think Jake said this on his and I think Jake's on there. He mentioned this, that too many people do not think of risk first.
100%.
You have to think of risk first, before you enter that trade.
It's everything. It's literally everything. And when I was able to turn around and become break even, right? Your profit, your success of break even. It was because I understood that concept, because, so many people are willing to let the stock, go against you, and you'll lose $1,000, but if you get a profit of 300, you're going to take it, right? And we have to flip that mindset. And it's so hard to get people to flip that mindset. And, that one of the things that's on our website, it's just education page. And it's literally starts with that. Like, we lay it out in a college format, because a lot of other places, they pitch these ideas of, hey, we'll make you a millionaire in a couple of weeks, right? And so people come in with those expectations. The number one thing that I get, Dimitri, is I didn't realize the time that I needed to invest to be successful in trading. That's the number one thing that I get, because you're right. A professional, it takes 6 months to get an edge down good, right?
Yeah.
And they're pros, so how much longer is it going to take a new person to get it?
Yeah, exactly. These are like the pros with even more advantages than we have, with more resources.
Exactly.
It's taking 6 months, when people come up to me and say, well, I'll try 5 trades. If it doesn't work out, your 5 trades mean nothing. You might as well not even try.
Dimitri, if I could show you, this is just this year, right? Every week I send out a watch list, and every week, like, I'll give you an example of how many earnings plays there are. So this was just another earnings play that I did, but you can see here, this is my watch list. Like, I'm getting data, each one of these files represents, at least 5 to 10 data points for me. And I've got years of data point using this edge, right? So it's not like I just came up with this last week or last month or last year. I've got data points galore that I've been able to fine tune. And what's funny about that is, that 1.5 time play, that comes from losing on one end and saying, man, I notice when I lose, this happens. Well, shoot, there's got to be a play there, right? And so your edge evolves and it grows. At first it may be 1, then 2, then 4, then 6. And so it's pretty interesting how
Definitely.
real
We have a
people
question.
trade.
Somebody's asking, Don, how long have you been using Market Chameleon?
2000, I think it was 2017. It was either 16 or 17 is when I.
16, 17. So a lot of years at this point.
Yes, a lot of years.
Yeah, and we have that. It's because I get like emails, and you just emailed me for the first time. I think we never even talked. Some people who've been here for years, I talk. They even call me at this point. Some of them call me on my cell phone at this point, but
Hey, I feel left out, Dimitri. Come on. I mean, what's going on, man? I thought we were friends.
I have people, that but I listen. Sometimes I tell them I have to, I can't talk, but what else? The point is that it takes a long time. There are people who have been using Market Chameleon I know that because I talked to a lot of them who've been using it for years, and it did in the beginning. It wasn't easy. They went through some of the pain, and some of them are doing very well. And sometimes I ask them to come on a show. I ask some people to maybe write a blog, but I think a lot of people they just like to trade. And I understand that. I'm not a good, it's very hard to get on in front of a camera and talk, and some people don't even want to, they don't want to give away their secrets either,
right.
And I could understand that too. But it takes a long time. And just like you, the similarities I would say is, besides using Market Chameleon, they like data, and they always have their own spreadsheet they're showing. I can't, I've seen so many spreadsheets. I'm like, whoa, they open it up. It's very easy for them, but they like the data. They start collecting it, and they put a lot of time and effort into it. So, and I think a takeaway is, that's part of the takeaway. And I like that you showed that you're showing your trades very small, because I can't tell you how many people have it in reverse. They have small accounts, but very big size trades, bigger size trades than I do. And I'm like, whoa, even, I'm, with all the years experience in my accounts, but, I would not do this size of a trade, so I think that's a good just kind of takeaway from there.
And you're taking a lot of different things into consideration. The fact that on Monday you did nothing because the market looked like something may be happening, and you stepped back rather than just trading is a good sign for sure. Yeah. We did. Jake had a question about two earnings this week. I don't know if they showed up for you, but I think it was Nike and CCL. I don't know if anything popped into or you can show that.
Absolutely. So what I do here, I'll show you via Market Chameleon kind of what I do on the downloads, right? So there's so many earnings, and when it gets really, really busy, when it's earnings season, there's just so many earnings. It's hard to pick, hey, which one do I want to play? So for me, the way that I filter it down during busy season, I need over 1 billion in this market cap section. I need over 1,000 in this option section. And then I put common, and then I put announced, and then I put next 30 days. I'll download this, and this is what goes into my Excel spreadsheet. If it doesn't fit this, then it doesn't go into my Excel spreadsheet. During the slower times, I'll actually drop this down to 500. So with that known, you can see that Nike definitely made it into my spreadsheet. The CCL also did as well. Now, here's something that's funny about Nike. You can see the Nike chart. Let me take away these lines here. You can see the Nike chart, and it was actually the stats on Nike. Let me bring it up. You can see 2 weeks out how it says 83%. So 2 weeks ago, I was looking at this with some of my teammates, and I'm like, man, you know what? This looks good. This looks good. And so we're selling positions around here, and everything keeps going down. And so I actually had to stop out a couple of times, and we actually got put spreads, bull put spreads around the 150 mark is where we ended up playing through. So this is one where it didn't work, right? Because the market actually began to puke. So that 83% didn't matter on Nike. So that's one where I actually had to lose on, but hopefully we'll hold 150 and I'll be able to win on this tomorrow. Now these lines here on Nike, I'll show you what I did for the after earnings. You see these lines that I have drawn here? I don't know if you can read the numbers, but it's 152, 152.82, 153.67. So what I did on Nike is I came in and I was using the data per MarketChameleon on my Excel spreadsheet. And it was actually showing, let me go to the home page here. It was actually showing a range of about 150. So you see how that's range down to 149. This one's 150. This one's 150. Now, what does Nike normally do? Well, it normally drifts down, right? So the drift rate is 17%. So what does that tell you? Well, if it does bounce, you can take a short, or wherever we open tomorrow, look to play a negative drift. Try to play the open to high and then short it down. But what were the ranges up and down? These were my ranges on the downside. I looked at it just VP wise, technical analysis wise. My first entry on this was just above 152. That was as high as I was willing to take it. So these were lines that I thought about taking it on, but I was comfortable with 152, averaging down to just below 150. So I was able to take shares of Nike and sell it into this push. Was able to capture, I think it was $6-7, and I'm done. I'm done with that range play, the gap down, the quick mover after. Now, another one that I didn't get filled on either way was Costco. I had Costco lined up as well, and you can see these lines. They're color coordinated for me. I know what each color represents, but Costco didn't fill me on the short or the long at all. So it didn't get to its ranges to play the range play, and that happens quite a bit. And I'm okay with that because I'm playing the range play. I want to know if I do get filled, that I have a high probability of winning. So on Nike, I had multiple plays. I had a play up to that did not work. I had a play through that I think is going to work. And then I had a range play that worked as well. So that's how I played Nike and what I was looking at on Nike. Now,
Perfect.
CCL, the other thing about Nike is there's a great after play here because what happens, I don't know if you guys have played Nike in the past, but Nike often dips on earnings and then it's 2 weeks later, it's at 75%. In fact, 2 days later, it's green. It's above where it closed, right? 3 days later, it's 75%. And then 2 weeks after. So there's another play here, guys. If Nike, let's say we obey this drift tomorrow, again, barring any market puke, if we're going to roll over, the Fed's are going to raise rates, who knows what's going to happen there. Barring any of that, we've got a play on Nike setting up here that we can put on. If you don't think it's going to go up, if you want to just capture the premiums, right, put on a bull put spread, right? Wait for the drift to low tomorrow. So let's just, here, I'll put one in. And Dimitri, I'm willing to come on one morning show and do one live with you, but let's just pretend like Nike opens up tomorrow. What's that right now? Let's say it opens up at 154, right? Well, Nike at 154 actual open. Well, the range here is 149.84 to the downside, right? So if we get a push down to 149.84, we get a push down to that 150 area. You know what? I'm going to put on a bull put spread right there for 2 weeks out because I think within the next 2 weeks, I'm going to have 3 shots on goal to try to get money out of this play. Does that make sense? Kind of how I'm playing it?
Yeah.
So, and if you want to come on a show and everybody wants to see it, yeah, no problem. I think that would be great. People seem super interested. We're getting a lot of questions. A lot of people are giving good comments. So, yeah, if you want to, it could be tomorrow or not. We could set it up for different.
Yeah, just send an email for a day you think there are a couple things.
Okay.
And maybe we'll get you on at 9:30, right as the show's ending, and just carry through with the opening bell with you watching your screen and see what's going on.
That's what I do. That's what I do every day in my room is that's how you learn. You actually have to see people putting it on in real time to understand, because I can tell you, it's like when you go to med school and you've learned everything, you're not a real doctor till you actually go and do your residence, right? And you got to actually do it and see somebody else do it. So yeah, I'll do that. I'll pick a couple days. Do you guys do an aftermarket show as well?
We haven't. No.
You haven't? Okay. I was just wondering.
There's almost not enough time in the day to get those
Right.
going.
There's just too many, right? Okay.
Yeah. Well, we could certainly, if you want to show us something interesting, I think that we could definitely do it. And again, I think just to the benefit of other people, because you're going to learn from experience, right? Nothing, even all the data, everything, it's still going to take experience and learning. And just even watching other people and learning and sharing your experiences is very good as well. I think, I got a lot out of it, today, and I feel like a lot of people got value out of it today as well.
Absolutely. And if you wanted, if you were seeing things setting up after hours and you wanted to talk about it, at the very least, I'd be willing to put something together and get you on. The Chameleon community would be super interested to see how someone's using the Chameleon to do things after hours.
Absolutely.
So if you do see something like that and you want to pop in and do a show, I would put it together and let the community know, and we could do it. So
yeah, that sounds good. So one of the things I'll tell you though is the difference between earnings before market versus after market. Call it anecdotal evidence. From my experience, you get a lot more volume and a lot more movement from after market close versus before market open. That's why I prefer to do the aftermarket close for the ranges, because you get these big moves. You got from 152 back up to 160 in what, 30 minutes, right? You don't get that. The ATR on this thing's $3.50. So this is why I like the range play for aftermarket, is because you do get this range. In the morning, it's a little bit less reliable because there's just not as much volume. At least that's what I found. So we can do a bunch of different plays, and we can do some in the morning. Some will require that morning. And then this is just another play, right? One of the 6 that happens to work best for aftermarket close.
And, so yeah. Do it after hours, because after hours could go to 8 o'clock, right? So you got a long time. So do you just leave them out there? Do you leave your orders out there? Are you watching it? Like, how are you?
So like I told you guys, my goal in life now is to spend as much time with my family as possible, right? I'm on California time. My kids come home and I'm done for the day. And I get up at 3:30 every morning and it just drains you, right? So I can't trade from 3:30 till 4 o'clock every day. It just wears me out. What I'm looking for is quick hitters. I want the range to get hit and then go the other way. So for example, Costco didn't fill me within the first 15 minutes.
Right.
Orders are canceled. I'm done.
Right.
Nike filled me, and I'm like, all right, great. So this gives me time to say, you know what? Is this a dead cat bounce? Let me actually go through the report, read the report. Let me understand the report. Nike's earnings really weren't that bad. They did good. So I was like, all right, well, maybe we can come up and I can capture $5-6 on this. I didn't think we were actually going to come back to where we closed. So that's why I didn't capture the whole move. And then I was done. Now, if it's a 1.5 times play, a lot of times I'll actually buy stock prior to trying to get the option, because the next morning, what you're looking for is a continued push. If the pre-market, if there's sell-off for that 1.5 times play, it's not a good thing. So I want to get in that stock beforehand. I'll hold that stock overnight and then sell that stock in pre-market and try to take those profits and turn it into a lotto style play with the options.
Right. And I hope people are picking up on this, because what Donald's doing, you see, he's not chasing the market, chasing prices. He's letting the weakness come to him, right? Like a market.
Like Costco, it didn't fill me. It's just let it go.
Exactly. You gotta let, because what do smart money do? They buy into weakness, right? They're the market makers. So you let it come to you. Too many people go the other way. They're chasing chasing the prices, right? They're chasing. So that's very good point there. But all right, I think we're like an entire hour. Donald, thank you very much. I think that was very interesting. People are asking about your service here.
There are a lot of questions. Let's, I guess we'll just leave it with the last question about your service. What's the time commitment? If someone signs up, how much time do they have to put in a day to make it worthwhile, do you think?
So my service is for anybody that wants to learn and be their own trader. Whether you trade an hour a day, an hour a week, it doesn't matter. It's what I'm looking for is core values in individuals and people that want to be their own trader and not just follow other people's alerts and say, well, what's this guy doing? Let me follow him. So if you're trading, if you're a swing trader and you just want to look at your trades, once or twice a week, that's great. We can help you. I've got my August swing trades. Everybody knows August was a great month. I lost once on the watch list swing trades, right? That's for the people that can't be at their computer every morning, every day. Me, I'm in front of my computer all day, every day. This is what I do. It's my living, right? I don't have another job. So we also have people that are at that level that are trading with us every day in the room trading. So time commitment, it doesn't really matter. The only thing that really matters, and it's just be your own trader. That's it. Be your own trader. Don't chase things. Come up with your own edge, right? And we can help you develop your own edge. And there's a 7-day free trial too. Like you can sign up for the 7-day free trial, and I can put this in chat. It's right here. It's, check it out if you don't like it.
Someone was nice enough to pop the link in. It is in the chat. You can pop it in again. I will also attach it to this, just so you know, Donald, all the videos. And if you want me to send you a copy, I'd be more than happy. These flow through to our YouTube channel. I checked it today, Dima. There are 850 videos on that channel. So anything we do, Market Chameleon, flows down to the YouTube channel. So I put in the link. Make sure you subscribe to that because you'll be alerted to all the webinars that exist.
And Dimitri and Will, I just want to tell you guys, I love Market Chameleon. I appreciate what you guys have done. It's an amazing site. I literally subscribe to 2 websites. One is dilutiontracker.com and the other is Market Chameleon. That's it. That's the only websites that I've subscribed to because your website is amazing. And what's amazing about I touched on one little section, right? Just the earnings tab, right? There's so many more sections in Market Chameleon. So
yeah, just so we know, we did have a question from Stephen who wanted you to go through all the screens you used on MC. There were, I don't know if you want to go to MC and do it, but I think maybe tomorrow morning.
Yeah,
you could come to this. All right, there you go.
So on this is where I get my my earnings list, right? So earnings, you can go to future dates right here, just under future dates. And this is going to tell you, hey, these are all the ones that are announced, right? Because I want to know which ones are announced. And I'm paying attention to the next 30 days. And what I do on my Excel sheet, I actually share this Excel sheet with everybody, is everybody can have read access to it. But if you want your own, if you want to be able to edit it, you have to download it. What I do is I have a plus 30s tab in here. I come in here, I just hit plus 30. I paste it in, right? And it's got all the data. It carries over to Market Chameleon. And then I copy paste that right here. If I just type in Nike, right, and I hit search for Nike, I go to earnings, and then I go to stock patterns right here. Well, all I'm copying is this positive occurrence right here. This positive occurrence line tells me everything I need to know. I put it into Nike, and you can see that is simply that right here, right? So that's it. That's where you get all the pages from Market Chameleon.
It's awesome.
Perfect. Awesome job.
Hey, I appreciate
so much,
you guys.
Donald. It was a great episode.
Thank you so much. Y'all have a great day.
All right.
Donald, thanks everyone for joining, and we'll talk to you soon.
Yeah, hopefully we'll see everyone tomorrow morning, 9 a.m. Same YouTube channel, MarketChameleon.com. Have a great night, everyone. Thanks again, Donald. Bye.
Thank you.